So, have you ever heard of a truth that somehow makes everything more tense? It sounds kind of crazy, right? Well, that seems to be exactly what's happening in the super high-stakes world of rare earth minerals. The headlines are all talking about a trade truce between the U.S. and China, and you'd think that'd be good news. But for some really key companies, it triggered a massive sell-off. So, what's really going on here? Let's dive in and see what the market might be missing.
This phrase, from a recent analysis by Jeffrey Neal Johnson, just hits the nail on the head. It perfectly captures this whole paradox. The idea here is that what looks like a step back from the brink, on the surface, is actually a pivot to a new, much more strategic kind of warfare. This isn't peace. It's a recalibration of the battlefield.
Okay, so here's the play-by-play. The news of a truce drops, and the market's thinking is pretty simple. Hey, if tensions are cooling off, then maybe the U.S. doesn't need to rush to build its own supply of rare earth minerals. So what do? Investors dump shares in domestic producers like MP Materials and USA Rare Earth. It makes sense, right? At first glance, yeah. But this reaction might be based on a huge misunderstanding of the geopolitical chess game being played.
And here's why that knee-jerk reaction could be dead wrong. See, this isn't about a big, clumsy trade war anymore. Oh no, China is developing something far more precise. You could almost call it a new kind of weapon, designed to target the very heart of America's defense and tech industries.
It's called the Validated End User System, or VEU for short. Now think of this thing like a smart bomb for supply chains. Instead of a total ban on exports, which would hurt China too, this system lets them control exactly who gets these critical minerals and who doesn't. It's all about selective access.
In this slide right here shows you just how surgical this whole thing is. Look at the two columns. On the left, you've got the green light, the permitted flow. So a U.S. company making, say, consumer electronics, sure, they can get all the rare earths they need. But now look to the right, under blocked flow. A defense contractor building missile guidance systems, cut off. Companies working on dual-use aerospace or automotive tech, nope, they're cut off too. It's designed to cripple America's national security industries while leaving regular consumer trade pretty much untouched.
So here's the bottom line. Far from being a sign of peace, this VEU system is a major escalation. It weaponizes China's dominance in rare earths in a really smart, sustainable way. And what does that mean for the U.S.? It means building a secure, domestic supply chain is no longer just a good idea, it's an urgent, absolutely non-negotiable mission.
And if that wasn't enough, the pressure isn't just coming from China anymore. Just as China is sharpening its economic tools, another major world power is stepping onto the field, and this could create a powerful new alliance that could really shake up the race for critical minerals.
This timeline really shows you how fast this whole situation is heating up. Before 2025, it was just general trade friction. Then, boom, late 2025, China rolls out its targeted VEU system. And now, Russia's president has just ordered a massive national strategy to ramp up their own rare earth production. You can practically see the chess pieces moving into position across the globe.
And this right here is the long-term threat. Just imagine a coordinated bloc where China and Russia control a huge chunk of the world's rare earth supply. They could team up to dictate prices, and more importantly, decide who gets access and who doesn't. For the West, this would be a complete strategic nightmare, making that independent supply chain more vital than ever.
So, the big question is, what's the U.S. doing about all this? Well, Washington has been making moves to build a resilient domestic supply chain, and two companies have really emerged as the cornerstones of this whole national security effort. First up, you've got MP Materials. You can basically think of them as America's designated prime contractor here. They've already locked in critical contracts with the Department of Defense, and get this, to directly counter China's threat, the government gave them a 10-year guaranteed price floor for their products. That's a huge deal for stability. They're not just talking, they are producing, hitting record output, and with almost $2 billion in cash, they've got the financial firepower to handle whatever comes their way.
But, in a world of targeted supply chain attacks, having just one supplier is a massive risk. You can't put all your eggs in one basket. That's where USA Rare Earth comes in. They're being set up as the strategic second source, a vital backup plan. They made a really smart move acquiring a UK company to get instant, non-Chinese technical know-how. With their own facility almost ready to go and over $400 million in cash, they're perfectly positioned to be the redundant supply line the Pentagon absolutely needs.
Which brings us right back to where we started, the market's reaction. The argument in the source material is that by selling off on that simple truce headline, investors have created this huge gap between the stock prices and the actual geopolitical reality, a reality that might just be a powder keg of opportunity. This chart gives you a picture of just how pessimistic or negative the market has become. These numbers show the short interest. Now, all that means is it's the percentage of a company's stock that people are betting against. They're hoping the price will go down. A number like 18% for MP Materials, that is extremely high. It's like a stadium full of people all betting on the same horse to lose the race.
So all this negativity sets up what analysts call a coiled spring scenario. It works like this. You've got tons of bets against the stock. Then, a surprise catalyst hits. Maybe a huge new DoD contract is announced. Suddenly, all those short sellers are on the wrong side of the bet, and they have to scramble to buy back shares to cut their losses. Well, this sudden wave of forced buying can cause the stock price to just explode upwards. It's a classic short squeeze.
So what does this disconnect look like in real numbers? Well, for MP Materials, even after that sell-off, the consensus among financial analysts suggests its price could have a potential upside of over 26% from where it's trading right now.
And if you think that's something, check this out. For USA Rare Earth, the potential upside is even bigger. According to analysts, for the stock to hit its consensus price target, it would need to jump over 48%.
This bar chart really puts that gap into perspective, doesn't it? It just visually shows you the massive difference between where the market has priced these super strategic companies and where Wall Street analysts think they should actually be valued. That's a pretty big disconnect.
The source material really wraps it all up with this powerful idea. The argument is that the market is freaking out over short-term noise, that truce headline, while completely ignoring the long-term signal, an accelerating geopolitical showdown that makes these American companies more critical, not less.
So that's really the question we're left with, isn't it? Is the market seeing a ceasefire, when in reality, the battle lines are just being redrawn for a smarter, more targeted conflict? It's a huge distinction to make, and one that could very well define the next chapter in the global race for tech supremacy.